McFaddin Ventures designs, develops, markets, and operates innovative themed nightclubs throughout the United States. For the 60 million Americans between the ages of 21 and 39 with large discretionary incomes, McFaddin provides friendly, unstructured, and entertaining environments where they can meet and have fun. Unlike competitors who are mainly underfinanced single-unit operators, McFaddin brings to the industry a high-equity, professionally managed organization. With 27 units in 19 cities, McFaddin is the acknowledged leader in its field. The result is greater profitability for McFaddin Ventures, which in 1984 recorded average unit pre-tax profit margins of 19.9%. This compares favorably with the restaurant industry average for 1983, which was only 4.2%. The Todd's concept, which was opened in the Galleria area of Houston in 1975, began Lance McFaddin's involvement in the non-hotel related club industry. Between 1975 and 1981, McFaddin's company developed approximately a dozen units under the names Todd's, Elon, and Cowboy. From November 1981 to August 1983, 10 more units were opened. These successes led to the decision to create a new company, McFaddin Ventures, and take it public in December 1983. The approximately $13.3 million raised through the offering provided for the opening of 8 new units in 1984 and the conversion of several existing units to new concepts. Today, McFaddin Ventures is targeting expansion into selected top 50 markets. One new entertainment restaurant has been introduced, and another is scheduled for completion in the fourth quarter of this year. Looking back over our successes, we believe we can attribute them to our strengths in 4 areas: concept development, management capability, operational controls, and marketing expertise. First, concept development. The ability to come up with a new concept is what gives McFaddin the edge over bar and restaurant chains with only a single concept. Our concepts provide us with diversity and the ability to produce new products to offset changes in lifestyle and potential downturns in any segment of the market. Locations with significant revenue and market potential are selected after extensive demographic studies. Leasehold improvements have long-term value. However, conceptual components generally have 3 to 5 year life cycles. Studies of financial histories and projections reflect that an average location will generate an attractive ongoing internal rate of return, assuming that a name and major concept change is made every 3 years. Past and present conversions, such as from the Cowboy to Confetti concept and from Thrills to the Acapulco bar concept, reflect our ability to profitably recycle locations. Our present concepts are Confetti, an ever-changing party of dance, lights, pre-recorded music, and video production. Confetti is expanding its food offering to include themed supper buffets and a late-night menu. Primarily targeted at customers from the ages of 21 to 30, Confetti continues to be our primary expansion vehicle. The Acapulco bar is a new concept intended to create a natural resort-style setting combining Mexican elements with other Latin overtones. The club provides an extensive south-of-the-border buffet and instructional gaming where permitted. This concept was designed to attract a slightly older market than Confetti. The 3 Acapulco bars, all converted from older McFaddin concepts, have met or exceeded our expectations. McFaddin's original concept, Todd's, creates a relaxed atmosphere through comfortable seating arrangements and popular, more subdued music for dancing. Lunch and in certain locations dinner are served weekdays. A new concept being developed is Rialto. Providing a relaxed cocktail party environment in an Art Deco setting, Rialto is for the more sophisticated, affluent customer between the ages of 21 and 40. Designed as a meeting and gathering place, it will have less emphasis on dancing than the company's other club concepts. Completing the spectrum of evening entertainment, Studebaker's recent acquisition is a themed period restaurant bar built around design, decor, and music of the 50s and 60s. Studebaker's customers range in age from the late 20s to the mid-40s, with an average age of 36. There are 17 Studebaker's units in 10 states, with profitability comparable to that of other McFaddin units. Studebaker's has also sold 10 franchises to date, and it is the intent of McFaddin Ventures to develop and implement a full-service franchise program before the end of fiscal 1985. Stuart Sargent, founder and co-owner of Studebaker's, will be joining McFaddin Ventures as a senior vice president. A graduate of the University of Southern Mississippi, Mr. Sargent has 6 years of senior management experience in the hospitality industry. As part of our expansion into the specialty restaurant business, McFaddin has introduced Huaraches. Huaraches features Mexican fare, fresh seafood, and an in-house bakery all in a courtyard party environment. Converted from a former concept, Huaraches was developed to strengthen our presence in the Houston market and appeal to a slightly older customer. A second reason for our success is management capability. McFaddin Ventures benefits from the diverse experience and quality of its senior management. Lance McFaddin is chairman of the board and president. Mr. McFaddin, a graduate of Southern Methodist University, has spent 20 years in senior management of successful club, real estate, and hotel ventures. Ted Heesh, Executive Vice President, is in charge of McFaddin's in-house design, development, and architectural group. It is Ted Heesh's innovative designs which make the company's concepts workable. A graduate of Rice University with multiple degrees in architecture, Mr. Heesh has been a principal in McFaddin Companies since 1977. The day-to-day operations of McFaddin Ventures units is the responsibility of Gary Connolly, Senior Vice President of Operations. A graduate of the University of Denver's Hotel and Restaurant Management School, Mr. Connolly has implemented sophisticated operating controls and training procedures developed through 16 years of experience in the hospitality industry, 10 of which have been with McFaddin. Implementing the financial controls and monitoring the day-to-day administration programs of McFaddin Ventures is Ross Stewart, Senior Vice President, Administration and Corporate Secretary. Mr. Stewart, a former Vice President of the Food and Lodging Division of Holiday Inns Incorporated, has 20 years of experience in the entertainment, lodging, and food industry. It is this experience of having been there that is vital to meeting the challenge of the company's administrative business. This management team has built strong in-house interior design, development, video, graphics, music, and research and analysis capabilities which provide the flexibility necessary for a successful market-driven organization. McFaddin's management expertise and professionalism, a philosophy of never leaving anything to chance, has enabled the company to maintain quality operations and high profit margins. This philosophy of never leaving anything to chance is the third reason for our success, our operating structure and controls. Although we have multiple concepts, certain operating standards apply across the board.
Have your jigger in your left hand.
Goes through an extensive training program before commencing work.
You seem like you might be able to catch on just as quick, if not quicker, bringing with your left hand over
every
with
90
the
days.
jigger.
In addition, third parties or spotters inspect each unit at least quarterly to evaluate the unit operations, including the handling of cash transactions. All McFaddin units are required to report financial and marketing data daily. Unit manager bonuses are based in part on the accuracy of weekly volume, payroll, and profit projections. In keeping with this point, each central office employee is rewarded in relationship to his or her success in providing units with better, cheaper, and faster support services. This return to the basics already is generating positive results in unit labor costs, beverage costs, and other areas. Finally, the fourth key to our success is our strong marketing expertise. Our in-house market research team anticipates future trends in social, fashion, design, music, and entertainment categories. Public relations and promotional efforts by our marketing staff direct unit operations on a daily basis. McFaddin Ventures Confetti was the first in the industry to capitalize on the health fitness trend by implementing a national aerobics competition called Most Physical Female in 1983. Carefully designed, integrated marketing strategy utilizes market research and positioning, advertising, promotions, and merchandising analysis to achieve customer satisfaction enabling McFaddin to stay ahead of the competition. These vital elements allow McFaddin to adapt to the continuously changing tastes, lifestyles, and habits of our target audiences. Concept development, management capability, operational controls, and marketing expertise have guided McFaddin Ventures into an enviable position in the industry. Concentration on these four elements has provided financial success and dramatic growth. Annual corporate sales have gone from $20,500,000 in 1980 to $41,950,000 in 1984, averaging a 26% annual increase from 1981 on. Gross profits have risen similarly from $16,252,000 in 1980 to $35,194,000 in 1984. Expenditures have been funded both from internally generated funds and from the initial public offering in December 1983. Total company assets are presently $43,145,000. Earnings per share, however, decreased to 60 cents in fiscal 1984 from 89 cents in 1983 due to several factors. A significant increase in the number of shares outstanding as a result of the public offering in December of 1983. A $381,000 asset write-down due to closure for retheming of 2 units, and an increase in operating and administrative expenses associated with expansion of new units. The outlook for 1985 is proving exciting. Earnings per share of 25 cents in the first quarter of 1985 represent a 47% increase over the 17-cent earnings for the first quarter of 1984. The increase in earnings performance is due to the full effect of the 8 units opened during 1984 and the continual focus on daily and weekly operating systems for projecting sales, payrolls, product cost, and bottom line profits. Both sales and profit margins have risen consistently at a higher rate than restaurant industry averages over the previous 5 years. In an industry affected by change, we believe our ability to adapt and respond quickly has been and will continue to be our major strength. While many single-unit and small multi-unit operators are having difficulties with such industry problems as lower alcohol consumption, the broad public awareness of drinking and driving, and increased dram shop liability insurance in several states, McFaddin, however, because of its size and scope of operations, has been able to increase liability and dram shop insurance with major carriers through blanket policies to more than adequately meet its needs. Introduce the nation's first major alcohol management program, a program that has received national media attention. The McFaddin program encourages responsible drinking and trains unit personnel to spot and manage customers approaching intoxication. Customers judged by unit personnel to have had too much to drink are offered free transportation home. Offset lower alcohol consumption and maintain high margins by raising prices on drinks and door charges in selected markets within competitive restrictions and placing more emphasis on buffet food and non-alcoholic beverages. Also, the nationwide movement to raise the drinking age has not affected the company's business significantly. In fact, 4 of our most profitable units are located in California, where the drinking age is already 21. Simply stated, our 1985 goals are to increase revenues, to better control costs, to improve customer service, and to further differentiate our facilities from our competitions. We are prepared to meet the challenges of today and the future. We look forward to maintaining our #1 leadership position in the industry through continued growth and by ensuring the quality of our products and services.